at manufacturing accounts, and there is this question from April 2023. April 2023, question 2. There is a trial balance which was extracted from the books of Kura manufacturers. Then from that trial balance, we have additional information. Inventory as at 31st December is varied as follows. We have depreciation, we have bad debts, we have the following one provided by the manager. There is corporation tax. Then we are required to prepare the following: manufacturing statement and statement of profits and loss. So generally, this is how the question on manufacturing comes in KASNEB exams. So you start with the name of the company, Kura Manufacturers Limited. So this question will test two things. It will test your knowledge of manufacturing accounts and also your knowledge of company accounts. Because this is a limited company. So we are to prepare the manufacturing statement. So we can enter 31st December 2022. So in a manufacturing statement, we give out the details of what was used in the manufacturing process. So we have in the description, we have the raw materials. What are the components of manufacturing? We have materials, labor, and overheads. So the raw materials, start with the opening inventory. How much? 43,200. The figures are in shillings, 1,000. This is very much important. If you put figures without the 1,000 signs, then everything that you are doing will be wrong. So make sure you look at the question clearly to see how the figures are represented in the trial balance. So the opening inventory is 43,200. You add what? Add purchases of raw materials. How much? Purchases. Purchases 360,000. Then you less what? You less closing inventory. Closing inventory is in note number 1. Closing inventory, it was 46,800. So put like this to show that the figure should be deducted. So add this, get this. How much? 356,400. So this 356,400, we call it what? This was the raw materials. Materials consumed. Then you add what? Add factory wages. Factory wages is part of labor. It is directly attributable to manufacturing. We have notes number. Accrued and prepaid expenses as at 31st December were as follows. Factory wages, 2520, administrative expenses. So we have accrued factory wages. Then we also have another factory wages in the trial balance. Can you see it? How much? 29,880. So 29,880 plus accrued 2520. You get what? There's 2,400. So at this level, we already know that you know how to do adjustments. So when you do them like this, it is allowed. So you understand what you're doing here? Yeah. But you have to show it. How you arrived at this figure. Then we have indirect expenses, indirect factory expenses. Indirect factory expenses, how much? 880. Then we have depreciation of the building and the depreciation of plants. Depreciation of the building. Can you see it? Not. Yeah. So it is like this. Depreciation is charged on the following. So we are looking at the expenses that were incurred in manufacturing. Factory wages in the name. Is it an income? It's an expense. Tunataka expenses zote that we have incurred in the process of manufacturing. So building, it is 2.5% on straight line, and then we have apportionment. 50% is manufacturing and 30% is administrative. Can you see that? So for building, you do it like this. 84,000 times the rate times the apportionment times 70%. You get what? 14,700. You did like that? Fine. Then there is depreciation of plants. Depreciation of plants is 216 minus 122,400. Can you see that figure? The trial balance. So this one gives you what? 93,600. Then you multiply by 10% times 60%. It comes to what? 5616. Any other expense? So if you add this, you get what? You get patience. Next time you come with a calculator. You don't go to an FA class with a calculator. It has been recorded. 70? Are you sure? 78, 36, 61, you get what? What is that? This is a factory cost or prime cost or factory costs. There is something called work in progress. Do you know what is work in progress? We have some items that are manufactured using processes. So, maybe the item has been processed. That is when you can call it work in progress. So, for work in progress, how do we determine the work in progress for this period? We start with opening work in progress and opening work in progress. How much? 800 less closing work in progress. You get what is there? 32, 400. Less this. Transfer, just put it directly to the last column. 28,800 and 32,400. So this plus this minus this, you get 431, 166, like that. This is what? The cost of, this is the cost of production. Some questions can end there. Zingine hazikuwa na work in progress. Then you'll find that there is transfer price. Some companies they transfer goods at a certain price. The transfer price of finished products. So this one you find it transfer. No, this is the general itself. Manufactured goods are transferred to the warehouse at cost plus 50% markup. How do you understand by that? Yeah, 50% of this one. So that will be our transfer price. Transfer price to finished goods. So we will not transfer at this price. If you transfer, you add markup. First of all, before you get the transfer price, you do markup, which is 50% of, for that one, 166. You get what? 215, 588. So now this will be the transfer price. Transfer price to finished goods. How much? 646 And that is our manufacturing statement or manufacturing account. So. Then, from there, we are asked to prepare a statement of profit or loss for the year ended. So, we begin with the name of the company. Every financial statement should indicate the name of the company. Then, statement of profit or loss. Statement of profit or loss for the year ended. 31st December 2022. So we started out with the figures and sequence. Sales. That is, it says. Our sales was at 920 million. Then less cost of sales. Opening inventory of finished goods. How much? 69,200. This is a statement. 69,200. Add what? If you look at your trial balance, there is some who have purchased finished goods. It's normal. Kama wewe ni Mungu unasiaka. Kiuzia kipaka kuuza watu. Sometimes unaweza jikuta mashini labda haijatumika. We didn't do the production. So instead ya kuuza hakuna, unafanya nini? You buy the stock. Okay? Tunapaka tunauza. This is what they did. So there is purchases of finished goods. How much? 3,600. Then you got what? Manufactured. Manufactured goods transfer. The goods that you manufactured, your transfer price, this one. 646, 749. Then you less what? The closing inventory. Closing inventory of finished goods, which is 183, 600. So what you get here is cost of sales. So this one, add this, you less this to get the cost of sales, which I believe is 539,949. So if you take your sales, you less the cost of sales, what do you get? You get a gross profit of what? Is it like that? Okay. Now I know my fingers are not wrong. Then you less what? Less administrative expense. Another administrative expense. Administrative expense. We had a code, isn't it? So it is 81,000 plus 240 minus 4680. You all know how we got those figures, isn't it? Yeah, you add accrued and then less prepaid. So it will give us 79,516. These expenses, I prefer to put them here. More than doing one statement. You understand? Yeah. When we are doing the initial levels in your water, as we advanced, you get 79, 516. So this one we are going to raise it. We have selling and distribution. Selling and distribution. Selling and distribution expense. We have 133,200 plus accrued 5040 minus 720. You get what? 137, 520. That's when we into this. Then we have the position of the building. Which is 84,000 times 25%, 2.5% times 30%. We get what? 630. There is depreciation of plants. Depreciation of plants goes at 93,600 multiplied by 10% times 40%. You get what? 37 to 44. So this one, we have another expense, bad debts written off. How much? Bad debts written off. Bad debts written off. Yeah? 1440. Then we also have increase in provision for doubtful debts. How much? That one you have to calculate. It is 6120 minus 5040. You can see all those figures, isn't it? The trial balance. Then this one will give you 1080. There is also what? This one, when you raise these expenses from here, from the gross profit, you get what? Then operating profits. How much is the operating profits? 160, 077. We are going to continue downwards, but I'll have to wrap this, then I continue. After you get your operating profits, then you less the venture interest. These are secured creditors. The venture interest, how much? 2880. When you get the venture interest, you get what? The figure that you get here, we call it profit before tax, which is 7. Yes? 157, 187. Then US tax, corporation tax, corporate tax. How much? Yeah? 28,800. Then you less this profit after tax. When you have paid tax, you get 128, 397. It is a profit after tax. And you now, what you get after tax, that is when you less transfer to general reserve. How much? At 600. And also, you less what? Proposed dividends. This is what you get to the shareholders. They are the ones who are paid last. 21, 600. You raise it, you get out. 103, 197. This is what? The retained profit or retained earnings. So some of the question, in the trial balance, you can find that when you will be given the net profit for the previous year. You add it. Yeah. Sasa, that is it on the statement of profit or loss. We have got our profit for the year. It was 103,197,000. Having obtained the retained earnings for the year, now you are required to prepare a statement of financial position as at 31st December 2022. In the statement of financial position, we start with the assets. And non-current assets. You can see them in the trial balance. We have land and building. There is the cost, which is 244,000. Shillings 1,000. Cumulative depreciation 33,000. The net book value 211,000. Then we have plant and machinery. Plant and machinery has a cost of 216,000. Then depreciation is 126, 144. The net book value is 89,856. So the total non-current assets is 300,856. This one is total non-current assets. Then we go to current assets. Current assets. Current assets, we have inventory. Inventory, we have raw material. Of how much? 46,800. We have work in progress. Work in progress is valued at 32,400. Then we have finished goods. Finished goods are valued at 183,600. 183,600. Then we have accounts receivable. Accounts receivable. If we had to do the workings, our workings should show that the result is in the trial balance 298,640. You add what? Not add, you less the bad debts written off 1440 and the allowance 6120. So all this will give you the correct figure for accounts receivable, which is 291,080. Then we have prepaid expenses. Prepaid expenses. We have some expenses which were prepaid, one of them being the administrative expense. Administrative expense, it is at 4680. And we have also what? The selling and distribution. The prepaid selling and distribution was 720. Add this Add this to this. You get what? The figure, you know the figure. 559. Total current assets. Yes. 599. 280. This is the total current assets. If you add them to non-current assets, you get the total assets of 860, 136. Total assets. Those are the total assets. Of the statement of financial position, we are going to deal with equity and liabilities. So equity, we have ordinary share capital. Ordinary share capital. How much? Ordinary share capital is 216,000. Then we have share premium. $18,000. Then we have what? General reserve. General reserve in that. There's the one that is in trial balance, 79,200. And there is the transfer for this year, 3,600. You get what? 82,800. Then retained earning. Retained earning. So total equity comes to 497,877. Then non-current liabilities. Non-current liabilities, we have debentures. Debentures, 10%. Debentures. How much? That's 6,000. Then current liabilities. Current liabilities, we have accounts payable. Accounts payable, 39,600. We have accrued expenses. You indicate here there is factory. We have admin. And there is selling. Factory 2520. Admin at 240. And selling 50/40. Then we have bank overdraft. Bank overdraft 77,040. There is also corporate tax payable. Payable 28,800. Then we have proposed dividends. Proposed dividends 21,600. You add all these current liabilities, you get what? 177, 840. You get what? Total current liabilities is 177, 840. Total equity and liabilities 860, 196. This is the total equity and liabilities. So with that, you will be able to do as many